I found out that 24 years after, the issue was exactly the same that I lived. When you want to launch a new product, you're stuck with the same old player. So we came with a concept which is Modular Bank. We disassemble the entire core banking platform to rebuild it. Everything is white label. Compliance is at the cornerstone of our DNA. By using the word cloud for financial services, you're not solving this. You're missing the point, which is what software, what technology is behind that is used for the cloud. But we're just at the beginning of AI revolution, and especially for banks, not everything is going to be first phase facing the customers. That's my belief. If you're FinTech, I would say, if you're on the B2B segment, I would suggest don't find a way to be a competitor, but more a partner. How you can even power these big players.
Hey everybody, welcome to another episode of The Arcady Code. Today we're doing in-person recording, and I'd like to welcome Arcady Lapiro to The Arcady Code as we talk to true innovator in the financial technology world. With over 20 years of experience as a fintech entrepreneur, Arcady is currently the CEO and founder of Agora Services, a company that focusing on providing next generation banking solution to community banks and credit unions. Arcady is also a venture partner at Blackfin Capital Partners, where he works with innovative fintech and insurance startups across Europe. Later in this episode, we'll be discussing Arcady's work with Agora's impact on banking industry through its modular solutions, experience with venture capital investments in fintech, the balance between scalability and efficiency, and rethinking fintech for smaller institutions. But first, Arcady, welcome to the show. Let's start with just you telling a bit about Agora Services, its main goals, its mission.
Thanks, Alex, for having me on your podcast. Good to see you in New York. Live from New York. Not Saturday. So I'm the CEO and founder of Agora Financial Technologies. So we're a US-based company, FinTech, definitely a FinTech. Basically, we are a mix of embedded FinTech player and bank as a service. We create a complete platform to power any bank, credit union, or FinTech that are looking to launch standalone financial services or a complete new digital bank. We can power them from A to Z. With our complete fintech ecosystem, we have a bank sponsor partner, we are partner Visa, we have the entire solution, we have even the front-end solution. So that's what we are.
As far as I understand the business model, it's a modular approach, right? It does not require any change of the core systems. How did you come up to that? How did you identify that particular approach, like modular approach and banking solutions, and what unique challenges does it solve?
That's a good question. Every question will be a good question, I'm sure. So I'm in the industry for over 25 years. So I'm not the young guy, cool guy, which is like doesn't know what is the old language, the old software. I lived with it. Mm-hmm. Back in 2000, when I was living in Europe, I was part of a founding and management team. We built a new digital bank from scratch. And we worked at that time with legacy technology player, and we had to rebuild on top of that a layer. So in my past, I had to deal with legacy platform. And we launched at that time the ancestor of what is bank as a service, which is kind of similar to Agora, but it was 2 decades ago. And I moved to New York 14 years ago. I was working as a consultant to many banks, advisor to VCs, to FinTech. And I found out that 24 years after, the issue was exactly the same that I lived back in 2000. That means you can be an established company, an established bank, established credit union. You can be a FinTech. And when you want to launch a new product, you're stuck with the same old player. So you can call them the dinosaur, but that's not, dinosaur was million years ago. These players are written still on COBOL, 40 years legacy. So it's the big one. So and they have in the US, I'm talking, they have all the markets. So it's a FIS, Fiserv, Jack Henry, etc. And when you have to deal with them, it's like you have to take the solution. It's like a block, and it's complicated to do any change management. You want to do a front end. It's easy because it's just a front end, but every time that it's connected to the data, then you had an issue. So I came back to the concept that we did in a certain way 25 years ago, but with a new approach, new technology, new model, which is what we call modular banking. What does it mean? It's like if you're a bank, you need to do a change management. You need to add a product. You need to add a feature. It's first you need to build inside the team. Eventually, if you're a small creation, it's complicated. Then you call your favorite provider, which is a legacy platform, and they tell you you're not the priority for them. It will take X months. They will have to bundle X players, and it's complicated. So we came with a concept which is modular banking. What does it mean? In concreto, like they say in old Rome, it's like we disassemble the entire core banking platform to rebuild it. So we sliced everything that is related to core banking into microservices, and we're leveraging, on one side, we're leveraging the API, on the other side, we're leveraging the cloud, which allow to build and to scale any product in a three-way. One, it's like they need what I call embedded fintech. They need very simple. They need a QYC, or they need a digital onboarding. So we can just call our API, which is about open account. The second one, it's verifying identity. And point three, it's move money to do the initial funding. Mm-hmm. So we bundle like a Lego box. We take the use case, we bundle our API, and we can plug it. And we can plug in two ways. Either it's completely dissociated from the legacy core, so we're working in parallel, or two, it's we're connecting it to the legacy core by calling their API. So it's like we're doing like a layer over the legacy core. So that's what we call modular banking platform. Basically, it's like we disassemble the entire process to be able to reassemble upon any use case. A use case can be a single feature, or it can be a complete digital bank. For example, you're creating you want to launch an SMB banking. So what does it mean? It means a billing feature. It means know your business customers. It means maybe a virtual card for expenses, uploading documents for reconciliation. So we can build that case, the use case. And by the way, we already built it. We have also completely white label banking solutions. So we built a feature which is the SMB account. We built another one which is for the teen banking account. And this year, we're launching two additional niche banking, completely pre-built from the back end to the front end on the migrant. And it's becoming very popular right now, migrant in the US, but on the opposite side, with a new president. It may be less migrant banking than before, but we're still launching because there's still a huge market for it, and there's a huge need. And the second one, it's for the elderly people, the silver generation.
I assume with that approach, with modular approach, the timelines are quite short to get it up and going. What are we talking about? Like, what's the average timeline for the project?
I'm going to give you a clear answer, but everything depends on what do you call the project. Is the project just a plug-in, a standalone feature? Mm-hmm. It can be super fast because it's just 2-3 API. We create a master API, we put the rules there, and it's ready to launch. So it's a matter of week. It's super easy. It's like we have a complete ecosystem. We integrated. We have all in one shop. We have everything. We have QAC, QIB, rewards, card issuing, wallet, push.
And it's going to be all white label for the client, right?
Everything is white label. It's I'm a former head of compliance, so we're not coming by saying we're putting our brand and the end user is seeing it. No, we're a software provider. We're not handling. When I say we're not handling with the compliance is at the cornerstone of our DNA, but we're not in charge of the compliance. We have a compliance tool, but we put it in the hands either of a FinTech or the banks and credit union, and they handle the compliance. And that's the way it has to be for regulatory purpose. There was some error on the market. Certain of my competitors were handling the compliance. I'm a former head of compliance. I was handling 2 decades ago $65 billion asset. We didn't decide to do that because we said it's not compliance. And indeed, regulator came in and said, no, the bank has to do it. So regarding timeline, it's a single case, which is a plugin. It's a matter of weeks. If it's a complete, let's say, digital bank, let's say a fintech wants to launch a complete digital bank, or a bank creation, they want to launch a standalone or a new digital bank offering. When I call digital offering, it's not just a website and an app. I'm talking about the complete product package. Everything depends on the use case. If it's a complicated use case, typically what will be most complicated will be like to validate the use case for us to draft, to lay down all the requests from the client and to have them validate. And this can take between 2-3 months because there's a lot of rules to validate, etc. But the technical implementation, it's 2-3 months. It's super fast. It's really like, think about the Lego box. All the API are already here. The microservices are built. It's just like to write the rules and to compile in the right sequence the microservices. I'll give you an example. Let's say you want to create a wallet. You will have to do know your customer. Then you have to create a virtual account. Then you have to define is there a plastic card, a virtual card, or no card at all? Is there a push payment, and how to fund the account? Is it push to card? Is it ACH wire? We put all the rules, and then after that, we just associate our microservices. So you see the logic.
Yeah. What I'm trying to understand is, as you said, like the majority of the industry is kind of dinosaurs. So the operating off the legacy systems, right? And then on your side, you kind of quite technology-powered company with modern technology. How do you like manage that gap between legacy systems that have their scalability, efficiency issues, and you building on top of that? So how do you address it?
So regarding the scalability and change management and scalability, there's two parts. So we're leveraging a 3-layer technology: microservices, API, cloud-based. So you may hear a lot of people by saying they're embracing the cloud. And I invite your listeners to read a recent report on cloud in financial services by Capgemini. It was released like 2 months ago, and I'm happy, I'm honored. I was one of the experts worldwide for this report. And by using the word cloud for financial services, you're not solving the situation. It's one of the components, but let's say a bank today is saying, we're leveraging the cloud. How do they leverage it? It's either the data or the code. Okay, so now let's say the data. The data, it's fine, it's perfect, but the code. So let's say they're putting their back office platform on the cloud, but what's the technology? It was on-premise and they're moving to the cloud, but it's the same silo technology. So you're not solving the situation regarding the scalability. You have a cloud, that's great, but you're missing the point, which is what software, what technology is behind that is used for the cloud. So that's why we're leveraging 3 components. That's our mindset. It's microservices, we sliced everything, API for connectivity, connectivity between us and the banks, and us, the legacy core, us with third-party providers. That's also part of our modular banking approach. We can integrate any third-party providers to extend any use case, and finally leveraging the cloud. So that's how we mitigate the change management, and most important, scalability. Scalability because there's no limit on the data and the consumption of data. And 2, it's like forgot to mention, it's like when you're legacy core, you have one platform, or they may have several platforms, several versions, but it's each time it's one version. So they will point to this version, or the banks. So it points to the same silo, let's call it this way. It can be on the cloud or silo, or on-premise, but it's the same silo. When we launch and we deliver a setup for a client, let's call it B2B client, banks, creation, FinTech, everyone is segregated from the others. It's one account on AWS. We're using AWS. We are an AWS partner, and we're pushing the code on that. So there's no impact on any of the client. Everybody is separate on the change management and on the use case. So that's the way we found out. And when I say we found out, there's no proprietary research. It's not rocket science. It's just we're leveraging the technology. So, but we're leveraging by setting up what we think is the best setup, triptych, microservices, API, cloud-based.
Right, but that also implies that the client side is scalable enough
Yeah.
to support you, right? Because you're not touching that side.
I'm not touching his data.
Yeah.
It's his data. What we do, it's like if we need to pull data from the legacy core, we pull the data through API with the legacy core, but we are handling this data as a middleware. So that's why we're leveraging the cloud. So there's few parts in the cloud-based. Cloud-based to hold the data, cloud-based to push or pull the data, and cloud-based to have the software running. So that's why we're handling. We're definitely not managing the data in the legacy core. When we do that, we calling, handling, and when we hold the data, it's on behalf of the client. When I say the client, it's the B2B client. So again, it's like it's not our data. It's completely tokenized, anonymous, and there's no impact on their existing infrastructure.
Yeah, that's a beautiful system. It's a beautiful setup.
Again, it's like it's not rocket science.
No,
it's not like we leverage. We found a proprietary research. What we have proprietary, it's our code, it's our mindset, it's our DNA. But again, it's like it's not everything that is cloud based is golden. Is gold. If you don't have the API layer, if you don't have the microservices, it's not going to fly. It's not going to run. So that's why when you hear some providers saying we're cloud based, okay. You're cloud-based, but how does it work behind the scene? What's the code? What's the architecture? If it's not microservices architecture, can't run.
What's happening now in the AI world is interesting. And
what's interesting? What was last week or yesterday?
I think yesterday was quite a day for everybody. I'm talking about DeepSeek. So let's spin the wheels and talk about AI. You worked at AI-focused companies like FinAI, right?
I was an advisor.
It was an advisor.
A long time ago, and before they were sold out.
Yeah. So it probably was before like that rapid development in the industry with the AI.
It was way before, yeah.
So now, taking into account what's happening with all the LLMs development, that race between OpenAI and DeepSeek, like, what are your thoughts on the future of banking industry, financial industry in terms of like applicability of AI?
So first, AI is a buzzword, and not in a bad way, but it's a buzz. That's why everybody's talking about AI. What happened yesterday with DeepSeek from China, but AI is not new. There was already a generation of AI even 20 years ago, and IBM was one of the main providers at that time with Watson. Already at that time, Watson. And they were already working with certain banks. And at that time, I'm not going to mention, but there was the largest credit union in the world, which is not here, but is in France. I'm sorry for certain credit union here, but the largest one is French. And they struck a partnership back in, when was it, 2005 or 6. And the purpose of this partnership was to deploy Watson/AI in the back office to answer the customer requests. So that was mostly backend. So it's not new AI. So what's new today? It's like it's the explosion of the technology, the funding, much more funding today than before. The explosion of technology, the open source coming. That's why DeepSeek is there, but we're just at the beginning of AI revolution, and especially for banks. Banks are slow to move. It's not like they're fast to move. They're always slow to move. So it's like they're going to focus AI on how to reduce their costs, how to engage the engagement with the customers. So it will take time. It's going fast, but it will take time. What will be faster, it's more like other kind of industries than the bank. But talking about the banks, let's focus about the bank. We're just at the beginning of a revolution. Being said that players like Chase, JP Morgan are investing massively in AI. Morgan Stanley or Goldman Sachs, they just deploy a chatbot, AI-powered chatbot for their financial advisors. So it's coming fast. But it's not going to revolutionize the world day one. So what's happening it will take time. They will be focused on customer engagement, efficiency, cost reduction, on fraud, etc. This is going to be fast because it doesn't impact right away the end users, because banks have one fear. If they deploy a new product, what will happen to the end user if there's a missed product?
Right.
So they want to be cautious. So that's their approach. Not talking about financial services, but what happened yesterday with DeepSeek revelation, let's call it this way, and the drama and the wipeout on the market is the concern that in the US we were told that AI requires massive money, massive investment, a lot of data, and you need a scale. And what DeepSeek did is they showed up in a timeline of 2 months and $6 million funding, built a chatbot, which is very similar to OpenAI if you look at the interface, same color, same design, but pretty interesting what they did. So the concern is like, do we need so much money than we thought? Does it require so much data? Definitely it will require much data. But today AI may go even faster because competition is here from China, because people realize now that they need less money. And 3, it was not really said yesterday or told yesterday, but it's something to have in mind that one of the first executive order from the new president, Donald Trump, was to rescind the executive order from his predecessor on AI. Last year, Biden enacted an AI order by putting some responsibility on developers, basically putting a brake on development of AI, and Donald Trump just resigned it. So regarding financial services, like there can be an acceleration now because there's a fear from China. There's new players that are engaging actively. So Twitter, for example, Elon Musk announced today that they're launching the X Money account. So that's a big competitor for financial services. Definitely is going to embed at every level AI. So now there's going to be a fear from banks and credit unions by saying, hey, it's not just a competitor, it's a competitor which has data from Twitter or X, and 2, is going to put a blockchain everywhere and AI everywhere. So there's going to be an acceleration of reflection and how to do it, but it's going to be in phases. Not everything is going to be first phase facing the customers. That's my belief.
Yeah, a couple follow-up questions I have. First is, you mentioned that big banks investing heavily in AI, but what we see as end users is mainly customer service stuff, like advisories, like support, and like, do you see AI going further, like, I don't know, to anti-money laundering monitoring, compliance
fraud.
monitoring?
That's why I was saying fraud. For me, fraud, it's compliance. Today, compliance and AML, there's already, not everywhere, but there's already an AI infusion. That means it's there. That's fair. That's why they
So
start.
you already see that happening?
Yeah, definitely, yeah.
How far we can go? Can we see like 100% AI powered bank at some point?
I think there's already one digital player which is pretending that. They say the AI bank. It's not a US bank. I think it was one in Asia. I can't remember, from Singapore. I think so.
Probably not with such heavy regulations of the US, right?
The question is I'm going to give an example. It's like we put AI in our Q&A testing, for example. So it's not facing the customer. So I can say that we have an AI-powered digital bank ourselves because we put it. So the question is what do you call AI bank? Let's call it this way.
Yeah.
So, but definitely today with AI, you can build everything. You can build the fraud model. You can build a product. You can build use cases. You can even write your pitch on the website for facing customers. So today, technically speaking, yes, you can build from scratch an AI bank. Yeah, you can. The question is the customer ready for that?
Is the trust there, right?
Exactly. And again, it's it depends on, if you're talking about, let's take a bank like JP Morgan or Wells Fargo or Citi. Do you think personally that their customer, they don't want to see any more branch? They don't want to talk to an agent.
No, that's conventional. If that was the case, they would have used something else.
Exactly. So it's like I'm a tech guy. I don't like to go to a branch, but I still want to bank with an entity that has a branch that I can call if there's an issue. There's still something. I don't know if you're a frequent user of let's call the chat bot of these big banks.
No, not really.
Not really. It's terrible. Me, when I open it, the first thing, so I'm receiving the question, it's like, what do you want to talk? What do you want to talk? I will put one word, agent. I open the chatbot and I put agent.
I usually say talk to a real person or something like that.
Exactly.
Talk to assistant.
You see, so exactly, that's your reflex. And we're kind of young still. We're techie. We know how to use a chatbot if needed with an FAQ. But still, if you're connecting it, it's because you know that you have a question. You want to talk to an agent.
Right. So talking about Agora, so your modular approach, do you already have or planning to have like AI module that could be plugged in different?
Oh yeah, we have already. That's what I told you. I mentioned we deployed AI on the QA part.
Yeah.
We deploy AI on the fraud part, on the debit card part.
Mm-hmm.
We deployed also on the AML side. So
what are the use cases there? For the debit card, what are the use cases?
Basically, the debit case will be like the AI. It's like let's say you a customer typically you transact $1,000 per week. Suddenly, it's a transaction which is not in the US, which is in Barbados for $10,000. So that's a option number one.
Detection mainly.
Detection model, option one. Option two, it's like it's also AI to compare between peers. It's not just your transaction, what you do on a regular basis, but you versus someone else which is in the same category. So there's different version, but again, it's leveraging a technology, but it used to be done a different way before. It was manual request before. I did that kind of thing back in 2005 when the online bank that we built, we had to build the first automatized AML platform. I looked at all the providers at this time, and it was not great because there was no AI at that time, really for that. So we deployed our own request. It was manual. So do you call AI? It's not AI, but it's very similar. We trained we set up certain requests, and it was automatized. The difference with AI, it's like you provide the first set of questions, but then you can train the machine to enrich it by itself. So that's a difference. So we're deploying AI. We're not deploying AI yet on on a product definition or use case. We're really more on the back end and on the development. So QA testing, write the scripts, focusing on fraud, on AML, QAC, QAB, and fraud.
So we spoke about you being an advisor on FinAI, right? And you've been an advisor on many other companies over the
Today I'm focusing on Agora, but I used to be advisor of several companies.
What advice would you give to smaller companies, startups, or smaller institutions that's competing against big companies like JP Morgan, so that they can have a leverage and actually compete with them?
So again, it depends on you compete versus a player on what. It's like JP Morgan is so vast, from capital market, investment banking, private banking, retail banking, corporate banking. It's like, and then it's B2C and B2B, let's call it this way. So you're a FinTech. First, it depends on the vertical. You're B2B or B2C. If you're going to compete on the B2C side versus a big player, good luck. I don't know if I have an advice. I say good luck, because it's like you need to raise, especially today, a lot of funding. Even if you're niche, if it's on a B2C segment, a lot of funding, unless you have a very different approach, a product which is unique. So my advice, it's like if you want to compete versus a big one, and if you are B2C angle, the focus is like be sure that you have something unique. Almost something like you can patent eventually, a processing payment on a B2C or identification method. Two, it's like be laser focused on a niche product or niche segment, because you won't be, today to say I'm going to launch a new FinTech which is going to compete with JP Morgan retail banking, no way. It's like I'm not saying that big players like Chime are not succeeding. They are, but they're not taking over fundamentally the business. They're grabbing not customers but users. I call it's users, not even customers. It takes time to engage. So that's where I would suggest like your B2C focus, laser focus, a lot of technology, niche product. Now coming back on the B2B. So I won't see more like competing, but more collaboration. If you're fintech, I would say if you're on the B2B segment, I would suggest don't find a way to be a competitor, but more a partner. How you can even power these big players. It takes time, but there are many players in the US. There's not only the big players. You have in the US over 10,000 banks, community banks, and credit union. So this market is way larger than Chase and others. So I would say don't position yourself as a competitor, but more as a provider. So the division, like they say in Latin, summa divisio, B2C, B2B. Your B2C, I would say focus on a niche product, something very proprietary, and mass market is not going to fly. It's very complicated. And if you're on the B2B side, more focus on how you can partner and with a main core, with a payment infrastructure, or with a bank, how you can partner. That's a way to do it.
Let's dive a bit deeper there. So you have exposure to venture capital world at the moment, right? So you see quite a lot of startups and fintech. What like trends do you currently see? What actually startups are doing in the domain? Are you somehow leveraging that at Agora, or you trying to ride the trend somehow? Yeah. So what do you see happening in reality?
So I'm going to do in phase. The last question, it's like how I leverage that for Agora. It's like one, it's like it's not based on this part only, but for the last 25 years, I'm very deeply involved in the financial services. I built a fintech, a bank myself. I was an advisor to many bank and private equity. The way I leverage it, it's like one, it's like to have a network, access to new technology, access to new potential partners. So that's a way also I'm enriching Agora's platform. So we're not building everything by ourselves. We have a set of partners. For example, the QYC, the AML, the fraud, it's not us. We have a partner, but some of them I selected because I was looking at them not directly for investment, but as an advisor. So I know that they're good versus others. I know the market. So what do I see in terms of trend? I'm going to say as a joke, 3 years ago, what was the buzzword for investment? What was for fintech?
3 years ago?
Yeah.
Crypto?
Exactly, crypto. So exactly 3 years ago, in your pitch deck, you should, if you wanted to raise money, you would have to say, I'm a crypto company. Until last week, what was the word to use?
AI, right?
Exactly. So there's a sequence, and all this is just buzz. So, and this inflates the valuation. I'm saying that, you see, we didn't prepare that. This is a random question. We didn't prepare that, and it's exactly that. The point is like, as an advisor to VC, my point is not about a buzz of hype. It's more about what's the need. And the way, personally, that's my personal angle. It's more like about embedded fintech, embedded insurance, about a B2B focus. So the trend that I see, there was a trend on crypto, there was a trend on AI. What's the future trend? We'll see, but every year there's a new trend. The thing, it's like, it's not about focusing on the trend. It's about focusing on the need of a market. Where's the need today? Where's the need tomorrow? The need of a market tomorrow is, again, embedded finance, embedded fintech, embedded wealth, everything embedded. Why? Because you're looking to provide services to established players that have a customer base. And they need to provide new services to this customer base. So that's a fastest way. So that's the way I see. And but talking about more macro, not talking about segment, it's the way I see it, there's a new phase of the venture capital coming. So there was the market slowdown the last 2 years. There's a lot of dry power now that accumulate. A lot of VCs are going to close. A lot of VCs are opening. So the market is not going away in terms of funding. But what I see, it's like the next wave of funding. And the next wave of funding, why? Because rates are going down. So you need to put money back in play into private equity and venture capital for the return. 2, because there's dry power. And 3, because the market cleans itself and there are new players coming, the new needs. So last year, you would have asked me the same question. I would have told you, spring is coming. FinTech investment spring is coming back. That's what, and I posted it last year. And today, I'm not saying it's coming back. It's already here. But money right now is going more into more mature company, Series D, C, D, E, with large checks. Funding for seed and pre-seed, it's tough today. It's tough, to be honest. But it will come back. It's just a question of opportunity. I'm talking about the market itself and the quest for return on investment. And if the actual president is pushing to reduce the rate, it's going to be more incitement for investors for any people to invest more in private equity than just to put on money market. And I'm not saying that everybody can invest in private equity. That's not my point. I'm just saying like if you're thinking about the amount to be invested, it's like a few months ago. If you're risk adverse, just put into treasuries. You can have 4 or 5%, even a little bit more, and it's guaranteed. And versus when the market is collapsing, you can lose everything. So, but today it's like if the treasury are going back to 2%, you need to make money. So that's my point.
Let's come back to compliance. You work both on regulatory and innovative sides. How do you balance like the need for compliance with ever evolving innovation?
So I'm not, just to be more precise with my words, maybe the same thing on your side, but my vision is going to be different when I express what we're going to do. I'm not working on the regulatory side. I'm a 100% software provider. Being said that, I'm a former head of compliance. So I'm going to step back. When you see all this fintech launching, where do you think the founders are coming back mostly of all this fintech?
What do you mean coming back?
What's the background?
Sales, finance, I don't know. Not technology and not compliance.
Exactly, that was my point. Most of these fintech founders are not compliant and they're not real bankers. When I say real bankers, some of them may have been in credit part of, for example, Goldman Sachs, but they're not true bankers. And the one that really care about compliance, when I say care, it's not that they like it, it's because they have to comply more, it's bankers. When you're on the credit score, of the credit side, for example, or you're an analyst, you're less exposed to compliance than a banker. So all this fintech, most of them, they're not coming from compliance bankers, true bankers, and to compliance. So it's not in their DNA, let's call it this way. But there's a wake up now, especially for regulators, which is saying, hey guys, there was a lot of non-compliance behavior. Now it's time to comply. I'm giving one example, which is very basic. It's the FDIC, the Federal Insurance on the Deposit. A lot of fintech were displaying that they are FDIC insured when they're not. The bank who holds the deposit is FDIC insured, which is very primitive. I'm giving like a basic answer, very basic example. I'm not going to controls or reports or analysis. Now coming back to what we do at Agora. I'm a former head of compliance. I was handling 65 billion. So compliance is, let's say, important for me. So we made sure that we had a compliance set up on our side, which is like the data are secured, stored in compliance manner, segregated, anonymized, not exposed. Regarding our client banks, creation of fintech, we provide them the option to use compliance tools that we have embedded already. We're not handling it, we have embedded, so we choose what I believe the best partners, and we integrate with them and to make it smooth. So if a fintech is working with us, they want to leverage our Know Your Customer Provider solutions, our email solution, our fraud solution, we made it available. So that's we made it super important. Also, we made it very clear that we're not in charge of compliance. Most of my competitors were claiming that they're handling the compliance. They were even when they were sharing their org chart from their team, there was a head of compliance, there's an email compliance, but they're software provider. The person in charge of the compliance is the bank and the entity facing the customers, because that's their P&L, mostly the fintech. So we made it very clear, and even if I'm a former head of compliance and I was back in Europe, that was 25 years ago, I was member of the board of compliance, negotiating the regulation with the regulators on a European scale. By that time, I was the one who negotiated for Europe with the IRS, the FATCA, the US person regulation. I negotiated that back in 2000 with the IRS directly. I was representing Europe for that. So I made very clear, it's like, we're not in charge of compliance. We have all the tools, but we're not here. We're not giving any compliance advices. We're working with compliance expert that we can introduce to banks, credit union, or to the fintech, but we're not in charge of the compliance. We don't have compliance in-house. We don't have BSA analyst, AML analyst. It's not, and I personally think that if we had one in-house, there's a regulatory issue for the bank. That means they're not doing their job. So someone should be concerned there.
Yeah, that gives you lots of freedom to innovate, I assume, right? You're not that tied up to compliance. If your statement is like, okay, compliance on the client side, so we can actually do more in-house in terms of innovation and look in the different innovative ways how we can solve problems.
So I'm going to give you an example, very basic example, a product. You know Revolut, right?
Yeah.
There's Revolut, there's Current in New York, there's N26 in Germany, there's New Bank in Brazil, Banzo in the UK. These big digital banks, which are grabbing a big chunk of the market share right now in their respective country. New Bank in Brazil has almost 50% of the retail market share, which is crazy. They're surfing on one product, which is called... they're surfing on many products, but one product that helps them to increase the deposit, it's called the shared account. The shared account or the sub-account or shared expense. It's what is calling the shared economy. It's a new concept in banking. So there's two aspects into this product, which there's the product itself, the technology, how to create that in your backend, and the compliance side. The compliance side, it's a checking account, so there's no big deal in compliance. It's like there's no compliance impact here. You can innovate without the compliance. The only part of the compliance is to provide a separate addendum, separate customer agreement on this specific, not just this product, by saying, hey, you have a checking account, dear client, you have a checking account. If you want to create a sub-account for budgeting, this is the fund flow. You have to initiate the instruction to move from your account to the sub-account. That's it. There's no other impact in terms of compliance. So there's no limit on the compliance side. The limit is on the tech side. That means to be able in real time at the fingertip to create a sub-account in app and to move money in real time and to have a clear and clean ledger. That's the complication. It's not the compliance at this level. What could be, if I have to think, the compliance side will be more like a instant onboarding or instant card issuing, because you have more analysis to do. So this is where you have more compliance to handle with. But we know how to handle that, and when we build a product, it's not us, it's with the customer. So we have the expression. We tell them this is what we can do on the tech side. You define the rules, we implement the rules, but we're not here to validate if it's a compliant product. I have a feeling if a product is compliant, so I will right away go back to the client and say, hey, we're here to help you to define the product. I think there's some kind of compliance you should check, but you have to check. We're not in charge of that.
It's their responsibility.
Yep.
Let's wrap it up with I usually, put these questions at the end because it's interesting to talk about them after all the discussions we just had. What is your perspective or vision of fintech industry heading to 5-10 years from now?
US or worldwide or certain region?
I don't know. If you can give your perspective on both, that would be great. And also, I'd like to hear how are you planning Agora's strategy, to leverage this kind of vision or trends in a sense.
So, fintech is not it's a new word. Let's say this way. It's from end of 2012, to be more precise. But it exists for 40 years. It's even one of the legacy players, which name is FIS, but they called themselves the first fintech, which is true, by the way. There were other fintech before that. Visa was a fintech at a certain point. So I'm saying it's like fintech, it's not a new word. It's just like it's more like an ecosystem today, which is identified and separate from the others. But it's not new, but let's say it's new. Fintech, 2 years ago, there was a fear that fintech was collapsing. It's dead. Banks are going to take over. And it's exactly what happened yesterday with AI. Suddenly, by all this AI buzz is done, and now it's not the big players. Small players can do that. So, but it's on the opposite side. This is to democratize AI. So what I'm saying about fintech, it's like fintech is here, going to stay, is going to accelerate. The question is it going to go mass market as a B2C offering or more niche banking or B2B? There's a space for everyone. So fintech is going to stay. The way I see the market is more like niche product on one side, and on the other side, it's more like infrastructure and embedded fintech, embedded player. So it's here to stay with different approach in phasing. For example, Europe is way more advanced in terms of open banking than the US. Right. So there's going to be more fintech in Europe. There's already a lot of fintech in Europe about open banking. A lot of them died. New players coming, there's one right now which is kind of has some issue, but expanding in Europe, especially in UK, which is called account-to-account payment. So some players launched it in the US. It will take more time. So what I'm saying, it's like there's a worldwide dynamic of fintech expanding. There's a new wave coming. Not every region has the same direction in terms of product. Middle East is very different from UK, from Europe, from LATAM, from the US. Let's not talk about Russia and all these countries. They're completely disconnected from the West now. So there's different dynamic. The way I see in the US, it's more like niche banking on the B2C side, niche product, and on the B2B, more focus about infrastructure. I think about infrastructure.
How do you plan leveraging that at Agora?
We're super well positioned because we are a pure infrastructure embedded fintech player. So we position ourselves as to be like again, the true modular banking platform that allow a fintech bank region to create any use case seamless and cost efficient in terms of pricing. So it's a complicated timing because right now there's a lot of market repositioning for many players, and the big players are stepping in, the legacy players, they're stepping in. But it's like the big bank. The big bank, they're stepping in, they're putting a lot of money. Chase is putting $15 billion IT a year. Does it mean they're faster? They're bigger, so it takes them time. And not all the money is going into innovation. So some is going into acquisition, restructuration, redeployment of certain tools. So it takes time for the big ones. So we're here not to target the big one. We're target here to target the tier 2 and below, banks and credit union, 10 billion and below, to be more flexible with the right product, right approach. So it's an interesting timing. So it will take time. Market is here. I'm talking about the US. So I believe we're well positioned. We have a technology, we have a right approach, and the market right now is waking up by saying, hey, there's a need because the big players are coming. Yeah. They're putting a lot of money. We need to move. If we don't move, we're going to die. You don't have to die. You're local. You have your customers. You're targeting a niche segment. We have everything that they need.
That's a great place to be. Well, thank you very much for
coming
over here, being a guest For the listeners, that was another episode. And if you liked it, don't forget to hit the like button, subscribe, and we will see you in the next episode. Thank you. Bye.